Guys, before I tell you what the rates are going to be for this week and where I think they're going, I got this cool new tool that I want to show you guys that calculates inflation. I'm actually sharing my screen now. I believe that rates they have to come down, right? The year over year inflation reports are sitting about 3.3 to 3.4%, which we're going to look at right now. And the feds really want to see it at 2%. Now, because you've seen unemployment go up, the jobless claims go up. And actually, one of the key factors that no one's talking about is people are keeping their jobs longer, right? Which means there's not as many job openings, which because there's not as much movement, right? In 2020, everyone was moving jobs because all of a sudden somebody was offering 100 grand bonus, 200 grand bonus. All this money was getting thrown into the environment. And so I want to show you guys a couple cool things, especially if you're a loan officer or you're a realtor. And if you can't see the link of where I got this, shoot me a DM on Instagram, Mortgage Coach Tony, and I'll make sure I show you this personally. So now what you're able to see here, let's see if I can make this bigger. Here we go. Right, this is the US inflation calculator. What I want you guys to see here is year over year, inflation is sitting about 3.3%. Right now, look at the crazy inflation numbers we had in 2021 and 2022. Here's the kicker, right? It's hard to conceptualize percentages and all these different numbers. Like, what do they mean? 3.47%. So let's actually put a dollar figure to it so that you can see exactly what this means and how to explain this better when you're sitting around the water cooler. So this is an inflation calculator, right? If I bought something in 2020 for $1, what would it cost in 2024? Well, the inflation over the last 4 years is 21%, right? We'll calculate again. Now check this out. If I want to compare last year's prices for $1 in 2024, look at that, 3.1%. It'd go up 3 cents, not too crazy. What's huge is that people right now, when they hear inflation and they're hearing this 3% term, they're thinking of it in terms as before COVID. Like that's become a thing now that we all talk about. Before the pandemic, before COVID, before Fauci. Like, what? No. They printed out 40% of all the money ever in the last 4 years. And like to put this in perspective, right? Going back to this nifty calculator, right? Well, what happens if I spend something that's $1,000? Let's say groceries, right? Between 2023 to 2024, it's only up $3. Okay, but what about from pre-COVID, right? Let's go down to 2019 to 2024, just 5 years, right? Let's calculate that. Look at that. You got to pay $22 more just to get the same thing, right? If you had to buy $100 worth of groceries, you make $20 an hour. And now you have to work an extra hour just to afford the same things at $100. And so that's why the feds had to get this inflation under control, right? They had to bring it down from 9%. They couldn't keep going at where it was. And so, I know Jerome Powell's he's a demon right now. Everyone hates him, but they did a great job getting inflation down, right? Imagine everything continued to go up like that. It'd be crazy. You couldn't afford to fill up your tank. So some big news as well that you definitely want to be paying attention to is the secondary market. Freddie Mac has announced that they are going to start issuing second mortgages. That's right. Freddie Mac is going to start issuing HELOCs, right? This has been approved by FHFA. So what does that mean? It means they're desperate. Now, Trump, when he was in office, had said that he believes in the privatization of the secondary market of Freddie Mac and Fannie Mae. Right now, it's government controlled. If it gets privatized, it's going to go crazy, right? They're going to come up with crazy products, right? It becomes something about making money. Now, Freddie Mac does in fact allow for HELOCs, It's a short-term solution for the banks to issue $850 billion worth of mortgages. But what they're not saying, what they're not telling you, right, is like the HELOC plus your 2% rate is probably higher than a 4% cash out refi. And so this is just what they're going to do is they're going to issue 10% HELOCs, knowing that in just a couple of years, when rates go back down and inflation's under 2%, and rates are sitting, mortgage bonds and mortgage rates are sitting at about 4.5, they're just going to refi everybody. They're going to do cash out refis. This just shows desperation amongst the bankers, amongst the government to try to issue mortgage bonds. It's pivotal. Now, this is very interesting here. What you want to see here in the bond market, right? We're in this weird phase right here where we're well above the support. There's not really a real resistance in sight. This has been holding as a resistance here, but we have a lot of wiggle room, right, on the upside and the downside. There's some reports coming out on Friday. Core PCE comes out Friday, which would cause us to break above this resistance, right? And there hasn't been much strength to break above this resistance. But if we do, I mean, we're going to be in a pretty good position. All of the data that has been coming out has been in our favor. The only thing that hasn't been coming out in our favor is the Feds just out of nowhere said, oops, we gone and bleeped up. We didn't spend 1.6 trillion. We actually spent 2 trillion. We forgot about 400 billion that we spent overseas. Come on now, get it together, guys. They need a new accountant up there. All right, so this is what you all want, right? Here's mortgage rates. Mortgage rates this week, right? Mortgage News Daily. 30-year fixed conventional sitting at 7%. I quoted out this morning on a 740 FICO purchase, 70% LTV, meaning they had 30% down. I quoted a 6.625. My FHA rates are sitting at 6.125 par. Jumbo pricing, I rarely do jumbo, but sitting somewhere in the mid sevens, I believe. And VA and FHA correlate sitting about 6.125, no points. That's probably a 700 FICO, staying below the conforming limits, right? 644 in Riverside County, 766 in San Diego, LA, Orange County. So rates are better, right? They're better, they're behaving better. And so I'm really excited for what's to come, right? Everyone's eager to refi, everyone's eager to get out from underneath their mortgages. For everyone who's in the industry, bright times are definitely ahead. The Fed's need to get their bleep together, right? Because rate cuts are coming. And if you have a loan estimate that you want me to review and you want me to check out, just shoot me a DM, Mortgage Coach Tony on Instagram, or shoot me an email, info@tonypalayo.com. I'll see y'all next week. Deuces.